Well, hello and welcome to the Smart Money, Young Money Show. And my name is Keith Richards, and I am not the rock star, but the portfolio manager at Value Trend Wealth Management, and I'm also the president. And today we are covering three subjects. So I normally cover some of the highlights of my twice a week blogs that I run. And I'm going to cover those. The first blog I wrote in the week was called Musings on Stocks, Commodities, and the Canadian Dollar. And I'm going to cover in that out of that particular blog, I want to focus on the market because a reader sent in a very interesting question on divergences that he was noticing on the S&P 500 between the momentum indicators and the S&P 500. So I want to talk about that and address whether this should be of concern to us as investors. The other thing that I want to talk about is the second blog, which was Stocks I Love to Hate. That was the title. And effectively, what I was highlighting are two sectors that I've covered very extensively in the past. The EV stocks, such as Tesla, the electric vehicle stock Tesla, and the what I like to call the clean green movement, which is the solar and alternative energy stocks. I wrote a blog back in January. If you go to the blog, you'll see the link to that blog. And what I want you to understand is that back in January, these sectors were massively overbought, as was Tesla. Since that point, they've fallen quite a bit, 20 to 30%. And I addressed the question, should they be considered good buys right now that they've fallen? In a nutshell, I'm going to direct you to the blog to read my answer, but I can say that I do not believe that they are buys right now, although I don't think they have a lot of downside. I just don't think they have much upside from here. This market is rotational, and that was a rotation that I saw coming. Pat myself on the back again on that one, but I also suggest that just because they've corrected doesn't mean they're going to continue falling, but doesn't mean they're going to rally right back up again. I think it's very much like what happened to a lot of the FANG stocks. Take a look at Amazon, take a look at Netflix. Most of these so-called Facebook, Apple, Amazon, etc., Netflix, those stocks are pretty flat since last August. So what my message is that the EV movement and the solar movement, whatever you want to call it, is pretty much done for the time being. It doesn't mean it's going to crash and burn. What I'm suggesting is that these sectors don't have a lot of upside because the market is rotating into other sectors. And we'll talk a little bit about that. But before I get started on the two blog subjects, which is going to be Bitcoin and the S&P 500's divergences, I want to show you a chart that comes out of our weekly newsletter. Now, again, I'm going to ask you, do you subscribe to our newsletter? If you go to our homepage of Value Trend and you click on Never Miss an Opportunity, that is the way to subscribe to the Value Trend newsletter. One thing I'm going to promise you right now is if you subscribe to the newsletter, you're going to be getting information that is not available on our blogs and is not available on these videos most of the time. And the other thing I will promise is that we will never contact you with a direct solicitation. Yes, in the email newsletter, you're going to get invites to things like our Zoom webinar that we did back in January. We're going to mention at the bottom of some of our email updates what we do, and always open our doors to anyone who wishes to inquire about our services, because that's what we do. But we're not pushy. We're normal human beings, and we appreciate the fact that people don't like to be solicited and aggressively approached just because they signed on to a newsletter. So that's a promise from me to you. Sign up to the newsletter. It's well worth subscribing to. Trust me on that. So I'm going to take a chart that I sent out in one of our newsletters from 2 weeks ago, and it's a chart that's going to give you an interesting investment opportunity. So I'm going to just share screen right now and bring you to that chart. So this is the S&P 500 since way back in March of just after the March crash of 2020. And what I have noticed is that most months, starting from April of 2020, not all of them, but most months since that March crash have seen a month-end sell-off where the market rises for the first half or maybe even first 3 weeks and then declines into the second half. And this is an interesting phenomenon where it's a little weaker during the second half. It doesn't always sell, like for example, in December recently, it didn't fall, but it went, but most of the movement you could see was in the first half of the month, and then it was more or less sideways. It does very often fall in that second half. So this is not something that I can guarantee you will continue on. This is one of those phenomena that is maybe an interesting phenomena. But my view on this is that while it's happening, it is a trading opportunity. So what I'm suggesting is that if you have stocks that have reached your targets, sell those stocks. If you're going to sell them anyways, it's better to do it usually by around the middle of each month. Hold some cash and then see if the market does in fact sell off into the latter side of the month and pick up the new stock that you are looking at to begin with. So that's a strategy that we have been using at Value Trend over the past couple of months, and because we just noticed this phenomena, and it's been very effective. So I'm passing this on to you. In fact, yesterday, which was the 16th of March, we sold a couple of positions, and we're up to 10% in both our conservative equity and our aggressive equity strategies, up to 10% cash right now. We're looking for new opportunities as the month progresses, with the idea that possibly if the trend continues for a sell-off into the second half of the month, we'll have great opportunities to buy cheap stocks. So that's our first chart. I'm going to bring you now to our second chart, which is in the stocks I love to hate department. And this is Bitcoin. So one of the factors that I use when I'm determining if a stock is overbought and due for a correction is the percentage the price of the stock or the sector or the security is above its 200-day or 40-week moving average. My general rule of thumb is once you get over 10% over the moving average, you're starting to get a little overbought. When you're 15% or more, you're very overbought, and it's more than likely overdue for a correction. Now, this is more of a general rule for the markets when we get into this 10 and 15 and 20% movements over the moving average. Stocks can move higher than that off of their moving average, but there's still a cap on that. And that cap might be 25%, 30%. When a stock gets as ridiculous as it did, say, with Tesla back in January, or the solar panel stocks, the TAN ETF I mentioned, these were phenomenally ahead of their 200-day moving average. And I called this as a likely market top back in January, and I was correct. I believe that Bitcoin at 160% above its 40-week moving average is ridiculously overbought and is absolutely due a correction. So even the problem with regular momentum indicators is they can stay overbought, as you can see stochastics did here, for quite a while. But when you get a peak on anything that is this much ahead, and this was about 160, 170% ahead of the moving average at this back in 2017, late 2017, and you've got your resulting crash. When you get a movement above the moving average that high, it's time to take a look and see the stochastics is overbought. RSI has been overbought for a long while, as it was here, okay, back in 2017. So I am usually concerned when you get these big spikes in above the 200-day moving average. Now, interesting, MACD, which is a slower momentum indicator, there's the peak in 2017. Well, take a look where it is right now. So this Bitcoin is crazy. It's overbought. It doesn't mean it can't get a little bit more overbought, but if I may offer one suggestion, now may not be the time to take a new position in Bitcoin. And I think if you've made lots of profits on this, maybe you take some off the table because there's a good potential for at least some kind of a pullback. For myself, I'm not anywhere near interested in investing in Bitcoin right now. All right, so the next thing I'm going to do, and I just noticed that half my head is being chopped off on the camera, so we're fixing that. So the next thing I am going to do is I'm going to look at the S&P 500. Now, this was as a result, this observation is a result of a reader named Sergio. So hats off to Sergio. And what I want to point out, as he pointed out, and I had failed to notice, is that a lot of the momentum indicators like stochastics, RSI are slightly, and I mean slightly diverging. You can see even MACD is slightly diverging from the new highs that are being made on the S&P 500. This is the chalk and money flow index. It's a momentum indicator based on price accumulation, so volume accumulation or money flow. So it takes price times volume up or down that day, and then it cumulatively measures it for money flow. And then this is the momentum of that money flow. It's falling as well. It's a little bit more short-term in nature, but these two indicators, in particular RSI and MACD, are longer-term in nature. So there is a bit of a heads up that we are seeing, and we're certainly seeing that on the stochastics indicator, which is directly below the price chart, that momentum's diverging. So Sergio asked, is this something to be concerned about? And my answer is yes, it is, although it's not a sell signal. So just keep in mind that it ain't over until the fat lady sings, as Yogi Berra, I think, said. So this is a bull market and in an uptrend until proven otherwise. You don't sell until you see a lower high and a lower low. At least you can wait for a break of the 200-day moving average to confirm that if you're concerned about a major movement. But even if you're just looking at taking profits, a small amount out of your portfolio, I wouldn't sell while the market continues making higher highs. Now, the divergences, though, have alerted us. So it's not a sell signal, but it's an alert. So the minute we see a failure to make a new high, maybe for those who want to be a little bit short-term in their trading decisions, maybe that would be a great time to take some off the table. Meanwhile, you can use that monthly observation I just made about the month end being a little weaker than the front end of the month. And that might be another combination here that we can observe as the market continues on its merry way. So that's all for today, folks. I'm going to bring us back there. Okay, so I'm going to open again the suggestion that if you don't subscribe to the newsletter, please do so. I think you'll find it of value. You can always unsubscribe, but I can almost guarantee you that it's going to present you with information that you're not getting on our other work. So I think it's a valuable thing to do. Also, if you do subscribe to our blogs, that's great. But if you just occasionally visit the blog, at the bottom of the page, you will find a never miss a blog button. Click on it. Again, they'll come into your inbox twice a week, and we don't solicit you. So don't worry about us using this. We don't sell your email address to anybody. We don't even post ads on our website. You'll notice this is a small family-run operation, you might say. We're a family office, and we want to treat people like they want to be treated. So our doors are open. If you have any questions about your portfolio, we are in that business and we're having tremendous success. Our style tends to do well in this rotational market. If you want to explore that for your own portfolio, please give us a call or give us an email. We're happy to talk to you, and we're low pressure type people. Thanks for watching.